Good afternoon. You're watching Midcap Radar for the final time this week, live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me is Vivek Iyer. Well, Vivek, good afternoon. It almost seems like the market is already looking forward to the match on Sunday. There is absolutely no action. The only reason why the Nifty is in the green is courtesy Reliance.
That's right. And the mid-cap and smaller cap indices both have cooled off from the day's high. And one good thing in the next week is that it's a truncated trading week. So that's something that we are looking forward to.
Music to our ears.
Quite a lot lined up on the show. Let's start off with the top headlines. Sensex Nifty trade in a range ahead of the weekend amid tariff uncertainties. Midcap gave up morning gains. Metals, along with oil and gas, are the prominent gainers, while IT and realty are the big drags.
Kalpataru Projects has gained in today's session after the company won orders worth over 2,300 crore rupees in its T&D business in the overseas market and building projects business in India.
Hexaware reports a soft quarter with almost no Q-on-Q growth, but the company sees business as resilient and growth is expected to be back-ended in 2025 with an expected improvement in margins.
PI Industries recovers from the day's low but is swinging between gains and losses after one of its biggest customers, QMI, reports strong sales in its first quarter earnings. Operating income rose by almost 36% on a year-on-year basis. And indeed, it is Reliance Industries that is keeping the Nifty in the green as of now. But the advance decline ratio, well, still in favor of the advances, 2:1 as we speak. The Nifty at 22,560, looking to end the week on a high. But the broader markets, though, have seen a bit of a cool off from the highs of the day. Mid-cap index has now turned negative. The small cap index still holding on to the gains. As you can see, the advance decline, the lines are converging. The small cap index still holding on to gains of around 0.7%. So overall, it's been a week that the bulls have survived. They have crossed some key levels on the index. They'd look to hold on to that in the upcoming week, which happens to be a truncated one, as Vivek just mentioned. But over to Vamakshi, who is here to tell us all the movers in the broader markets, and there are plenty of them. Vamakshi, good afternoon.
Well, good afternoon, Hormas. The mid-cap index as of now is reeling under quite a bit of pressure today. It is underperforming the benchmark indices, and some of the stocks that are contributing to this sort of decline includes Mahanagar Gas, Oracle Financial Services. That stock is down nearly 3%. Aegis Logistics is another counter that is declining by almost 3%, and Hitachi Energy too down and out in trade today. On the flip side, let's take a look at some of the stocks that are gaining in trade today. Inox Wind is trading close to the day's highest point, up nearly 12%. Triveni Turbine too seeing an uptick of almost 10%. The stock has been doing quite well of late. Sun Pharma Advanced Research also up 8.7%, and Apar Industries too trading close to the day's highest point, up nearly 7.5%. Let's take a look at some media stocks as well, because that is the top sectoral gainer today. Saregama is up nearly 4.15%. Z Entertainment too, we saw some promoter buying out here. The stock is up nearly 4.5%. Network 18 and their networks are also up nearly 4%. Defense stocks are also some counters that are seeing some very strong gains today. Data Patterns is up nearly 12%. We also have Bharat Dynamics that is surging by almost 7%. Mazgaon Dock and Garden Reach Shipbuilders also up anywhere between 4 to 6%. On the flip side, let's look at the realty stocks, because the realty index is the top sectoral loser today. Godrej Properties has cooled off from the day's highest point, trading close to the day's lowest point instead, down nearly 2.8%. Prestige Estates, Macrotech Developers as well as Oberoi Realties are some other counters that are declining anywhere between 1.5 to 2%.
Thank you so much, Vamakshi, for joining us and giving us a sense of what exactly is transpiring as far as the broader end of the markets are concerned. Let's now welcome Hemen Kapadia from DR Choudhury FinServ for a technical check on the market. Good afternoon, Hemen. Good to see you once again. What are you making of the markets at the current levels? Can this bounce that we've seen this week sustain both in the Nifty as well as some of the broader end of the markets?
A very good afternoon, Vivek. Thank you for having me on the show. It's always a pleasure. Couple of points. Firstly, the VIX is at 13.5. So that is, frankly speaking, a fillip for bulls. Secondly, you guys spoke about Reliance. Reliance was crucially poised at 1200, broke through 1200 on the downside with a major concern. It's come back with a spring effect. I think in terms of sentiment, weightage, Reliance is an industry in itself. So if Reliance comes back and closes about 1200 today on the last day of the week, I think that is great. I assume now it should sustain about 1200. If it does, it's a big positive. Reliance has been down for 8 months today. Like I said, weightage wise, it's massive, even sentiment wise. So Reliance stabilizes, looks like market stabilizes. Thing is, we had two bearish gaps. One got covered, the other one hasn't yet been covered. We've seen a recovery, not a rally. But yeah, many stocks which were down, especially on the PSU stocks, there have been some minor technical green shoots. As of now, whatever positive that we see in WIC are restricted to the daily charts. Obviously, after such a massive fall, the weekly charts will take some time to correlate, recover, synchronize. So I have a feeling that things are just about beginning to look better. Bank Nifty relative strength didn't break the bottom of 27th January. Tested, but didn't. Nifty did. Currently, Bank Nifty looks like going down for a day or two. So frankly speaking, it's all over the place, but things are just beginning to show first signs of some stability coming in. And if this continues for a few more days, the longer it puts around these levels, more chances of a further recovery or an upside coming in. Vivek.
Hemant, good afternoon. Thank you for joining in. You mentioned Reliance, you mentioned some green shoots in PSUs. Are either of them part of your stock recommendation list?
Reliance would have been a blind buy almost, but the fact that it's moved 90 bucks in 3 days means we could see a small correction. But incidentally, it was a BTST call in your sister channel CNBC Bazaar at 3:15 yesterday. So, having said that, on a decline, I think Reliance quantifies as a buy right now. But yeah, I have a couple of other stocks, but they are conditional buy because they moved up a bit. So no minor decline. First one is a buy call on Asian Paints at 2240, stop loss of 2190, target of 2340. Deeply oversold, positive divergences, crossover buys, mechanical indicators, not only in the daily but on the weekly charts are given crossover buys. Stock is on the verge of doing an upward bar reversal. Everything seems to indicate that we've probably formed a base and we're looking for a bounce. Second stock is a buy of PSU pack Hormuz, BPCL, IOC. All of them are beginning to look good after months of declines. So upward bar reversal coming in as far as BPCL is concerned. But once again, conditional buy at 255, stop loss 245, target 275. The stock has moved from 235 to 265 in 4 trading sessions. A small time price correction is necessary. Once again, positive divergences, crossover buys, things are looking better from you.
You must give that to you, Hemant. A couple of weeks earlier, you had recommended a buy on Asian Paints and had left us wide-eyed because everything was getting smashed left, right and center. And you stuck to that word, and it's one of your recommendations today as well. So thank you so much for sparing time and joining us this afternoon today. And we hope you have a good weekend and you can enjoy the match on Sunday as well. We take a short break here, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, where you get instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the App Store or the Google Play Store, or scan the QR code that comes up on your screen in just a bit. We take a short break, back on the other side.
Welcome back to Midcap Radar. Well, Birla Opus Paints has opened its first ever experiential paint studio in Gurugram, Haryana, and aims to set up and commence operations in 10 such experience centers in the next few months. Abhimanyu Sharma spoke with Rakshit Hargave, CEO of Birla Opus Paints, about this and began by asking about the new experiences that will be provided to the customers.
So this is the first of our paint studio getting inaugurated today. And the idea behind setting up the paint studio was to create a one-stop shop where the consumer can actually understand the category and make choices. On my backside, you can see these are paint cans for iconic India paints. So while we can create more than 2,400 shades, for the consumer, we decided to create some special 200 shades which defines what India is. And when you talk about a paint, you talk about the paint shade with a name, because that becomes much easy to remember. So for example, a handbag blocks a seat, Paris to Bombay, ink stained fingers. These are just creative names to decide and, to let the consumer know, to be able to relate a shade with a paint. So the whole idea was that how do you make this paint store, a studio, a hub, both for consumers and for architects and designers and also contractors if they want to come here, to help them make a choice. Because we realized that the consumer always had destinations for other categories. There was a defined place where you could go and choose and talk about your furniture. There's a defined place where you can go and talk about your furnishing. You want to buy lights. But for paints, there was the organized system where you could come with your family, you can come with your designer, was not there. So I think we are filling in that gap, and we said that the purpose of Birla Opus is to change the way people look at painting and remove the paint from paints, and I think this is a step in that direction for us to be able to create that.
Moving ahead, what kind of expansion plans do you have for such stores? We understand this is a company-owned, company-operated model, but your main focus will continue to remain on dealerships. What is the kind of expansion strategy you're looking at? What is the scale of investments or capex you're looking at?
So we are going to start 10 such company-owned stores in different cities. So you have Delhi, Gurgaon, you have Navi Mumbai, Mumbai, you have Bangalore, Hyderabad, Kolkata, Surat, Lucknow. So there will be 10 of these. But obviously the main model is to work through dealerships and franchise dealerships, the Opus Paint Gallery. From an expansion point of view, we continue to do what we had said. So we will, we just commercialized our Mahad factory yesterday. We will start trialing in Kharagpur. So with that, the investment in the factories for the first stage is over. Along with that, we will continue to set up more dealer franchisees. I talked about this 10 company-owned cocoa stores. We are in line with our number of dealers that we had set for ourselves, the number of towns that we had set for ourselves for the first year. So from a KPI point of view, the first year will be more or less met in terms of what we had committed to the market. And then the next year starts.
My final question to you, what is the targeted market share in the segment you intend to grow? And also, what is the focus customer base which you are targeting? We understand you're also looking at tier 2 and tier 3 cities as we move ahead.
Yeah. So obviously, if we have gone to 6,000 towns, we have gone to metros, tier 1, tier 2, and we also have got presence in rural. We are getting a good response from across the ecosystem of all town sizes. And we are still very young, so we will continue to have teams to focus on all the segments. So it's not that we are getting a better response in segment A or segment B. From a numbers and target point of view, we continue to hold on to say that we wanted to exit this financial year with high single digit. And, more or less we will be in that high single digit zone.
Aiming for high single digit growth is Birla Opus. We take a short break. More on the markets on the other side. Stay tuned. Welcome back. Now, sources are telling CNBC-TV18 that the Reserve Bank of India is currently examining cases where co-lending is resulting in a higher rate of interest for the borrower. Ritu is joining in with more details on that. Ritu.
Well, yes, the Reserve Bank of India is tightening its scrutiny of co-lending agreements. We understand from sources that the regulator is closely examining such agreements, co-lending and otherwise, especially in cases where borrowers may be facing higher interest rates because of these partnerships. So, for instance, one concern is that instead of offering borrowers the weighted average rate of the two lending partners, some agreements are reportedly charging a higher rate, a practice that the regulator is not too pleased with. Now, we also understand from industry participants that the Reserve Bank of India has expressed its discomfort over co-lending partnerships with unregulated entities like fintechs, and this scrutiny is also coming at a time when co-lending is seeing increased traction, especially between two NBFCs and between fintechs and NBFCs in segments like unsecured loans, where the industry is seeing rising delinquencies. Now, according to a CRISIL report from last year, of the 1 lakh crores of assets under management under co-lending partnerships, about a third was from personal loans alone, although this number likely came down since because of the higher risk weights. Now, importantly, there are no explicit guidelines that disallow such partnerships, but there are regulatory grey areas. While you have the digital lending guidelines, the 2018 and 2020 guidelines on co-lending between banks and NBFCs for priority sector lending are silent, for instance, when it comes to NBFC to NBFC co-lending. Now, this also isn't the first time that RBI has raised these concerns. We understand that last year as well, the regulator had written about these issues to specific lenders, urging them to strengthen underwriting standards and enhance the monitoring of these kind of deals. Tech integration between banks and NBFCs has also been highlighted as a potential operational risk. But for now, it looks like RBI is stepping up its oversight. Whether this results in directions to specific entities only or more than that, we'll have to watch out.
Ritu, thanks a lot for that. With that, we call time on this edition of Midcap Radar, but not before we head into the big event on Sunday, which is the final of the ICC Champions Trophy between India and New Zealand. Of course, the good part is that the trophy is at our end this time around, Vivek. But are you going for a contra trade this time around?
Absolutely not. I'm going in with the men in blue, and I'm sure they're going to bring back the cup.
We definitely hope so, and 140 billion Indians would definitely be hoping that this time we do cross the final hurdle. But from Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.